Good morning. It's Friday, May 2nd. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So I'll be moving officially into this office over the weekend here, bring some furniture in here, kind of absorb some of the sound. I know a lot of people said that there was an echo here, and we'll get rid of that over time. It just takes a little bit of time to get acclimated to some of these offices here, kind of moving, positioning around some of the furniture and things like that. We'll get some sound panels as well. So we do have the Formula One race over the weekend in Miami. Got my Miami shirt on here right now. Some Red Bull shirt. Max Verstappen's done a great job here. He's like a one-man show. Ferrari's really my team. Love Aston Martin here for all your Canadians, Lance Stroll and everything else. And then I think McLaren is just kind of running away with this thing here with a power struggle between Piastri and also Lando Norris. So we'll see what happens on that race here. If you haven't turned into Formula One, it's exciting and it's commercial free. So there's their plug for that. So I saw a lot of clients here adding to gold, silver, copper on these corrections down to support, reducing some of that long equity exposure, also adding some of the cryptocurrencies on the breakout to the upside. Remember, they do have Solana futures as well now in a lot of these markets here. I don't know about you, but I woke up a couple times here last night checking out the quote board. And I usually try not to do that here because it disrupts the sleep here. But gold futures holding on to some of those gains here. Silver futures giving up just a little bit. Copper futures still rising here. Oil futures kind of a mixed affair. So we do have a global stock market rally gaining some momentum here. And this comes ahead of the U.S. payroll data. It's really on the hopes here that there'll be a resolution of some of this U.S.-China trade tensions here. So we've seen 8 consecutive days of gains, and it's its longest run since August here. Again, on an optimism surrounding the trade tensions coming down. If we do close on the S&P 500 in the green here, it'll mark its longest winning streak for the benchmark since November 2004. So that'd be 9 straight days going up here. So investors are betting on the Federal Reserve to accelerate interest rate cuts to kind of head off an economic slowdown. So they're thinking that they might start to front run it. So money managers are pricing in about 4 quarter basis point cuts here throughout 2025. You are seeing some of the large financial institutions downplay those types of expectations. And we know we've been disappointed with Jerome Powell in the past. And that's where President Trump is expressing some of his criticism towards Jerome Powell. So if you look at the S&P 500, up about 0.5%, 5648. So 5650 on up to about 5700. Though it's kind of the resistance zone here that I'm looking where I might start to lighten up on some of the micro S&P futures and then start looking at some farther dated put options. I don't know if we're going to go down and retest those lows or what would cause that type of sell-off here, because it feels like we are starting to, never use feelings, we're starting to turn a corner here on some of this trade war, trade conflict, things like that. And we'll get some clarity as far as where the economy is going and everything else. But it might be a buy the rumor that something is being resolved and then sell the fact once it is being resolved, because you've got to weigh in on how corporate profits and things like that have already been hit. So we'll keep an eye on that as well. And then you have the NASDAQ futures here, just hovering right around that 20,000 mark, so a little bit below it here as the video is getting underway. And then the Russell 2000 sitting at 2,000, and that chart paints a very different picture from when you look at the NASDAQ and the S&P 500. Remember, 80% of those companies within the Russell 2000, they are unprofitable. They are impacted by tariffs, high costs of interest rates and things like that. So it's quite problematic, and we never really see the Russell take off because many of those companies in there are acquired or go out before the fact that they could really take off to the upside. So there's no real shining stars in the Russell as far as I'm concerned, but that's my personal opinion and I'm entitled to it. So you look at some of the earnings that came out, and these were the gyrations that we saw in the overnight session here in the US equity markets. You got Apple shares slipping about 3% in the pre-market trading after sales from China declined more than anticipated last quarter. Meanwhile, you got Amazon dropping about 2% in the pre-market. Its operating income forecast had missed expectations. You'll have Chevron and you also have Exxon. They will be announcing earnings here in the pre-market. So the economic data coming out is going to be the April jobs report. So I'll be tweeting out the final countdown because they used to play that on CNBC ahead of every jobs report dating back to when I got started in this business right around just after that 2000 mark. So I've been doing this for about 25 years if you're going to date me here as a futures commodity broker. So looking at that April jobs report, the estimates are for 138,000 jobs created, and that's going to be a little bit lower than last month's, which was 228,000. We'll also have factory orders and durable goods orders coming out shortly after that. So on the tariff news, again, China's Commerce Ministry said that U.S. senior officials had repeatedly expressed their willingness to talk to Beijing about the tariffs. There's also been some shakeup here in the Trump administration. Some of the workers here and people that are working on these tariff negotiations, they've been reassigned to other things. So they were some of the hawks on China, and I think that's where we get some kind of relief rally there. So looking at the precious metals overnight, you've got gold futures tacking on about 1.4%. So the dip buyers really came in and they started buying to front run China's return. If you were talking with me, it's a lot of, we were discussing yesterday with many clients that the sell-off is a result of China liquidating about 5% off their all-time highs here as far as their open interest on their book. And then once they come back here and they start reopening, how will they interpret the lower gold prices? Will they embrace it and buy it up? So I think a lot of people were front running that. Gold futures also tested a couple key levels. It was the 3265 area, which is the return to the scene of the crime. So here is the resistance point where we're at trading right now, that 65 to 75 pocket resistance. You look for a breakout over about 3290 here, and then it could be back on here as far as a party to the upside in the gold market. So we want to keep an eye on that. 3365 has been about the resistance zone, and gold traded for about 5-6 days in that trading range here. So we'll see if we can get, remember, old support or old resistance becomes new support. Now we've broken through it, so it now becomes new resistance again. And these bull bear lines, really, it becomes a battle zone here in the market. So we'll want to see if people have multiple positions. They'll probably trim a little bit off. They'll rework some buy stops up above a little bit of a level here, maybe that 3290, 95, something like that, where we get this breakout, or even 3304, you get the breakout again, and they'll start putting those back on, and then they'll put their stops at that new support level. So that's kind of how that works here. It's a lot of picking and planting and pruning when it comes to futures commodity trading. So you look at some other things here. The gold market is also edging up because you got the dollar a bit weaker here. Dollar's had an incredible couple days snapback here, but at 100 to 1, you look at how a lot of the financial institutions are presenting their plays on the dollar index. They think that we can go significantly lower. So the gold market is set for its first back-to-back weekly loss for the year. And again, the safe haven appeal has really come down just a bit here as you get this US-China trade war, some strong tech earnings and some economic data coming out, and they're all kind of factoring into these markets. So you look at the exchange-traded funds, they did tack on about 85,000 troy ounces of gold in the last trading session. And then you look at the ETFs in the silver market, big bets on that silver, almost about another 1 million troy ounces going in there. So people are going in, they are grabbing that silver here. You look at the chart pattern, the only problem that I have with silver, and it's not necessarily a problem, it's just that you see the way that the market had gone from essentially $35, breaks down to like 30. We get that massive washout, that Sunday night washout. We come back and we rally, and we did an excellent job coming up, but as it starts to break down again, you kind of get this unsettling feeling like if it starts to break critical levels like 31.50, that there is not much support there. It could go down to $30, 29.25. That's where the double bottom in December occurred. And I'm not a bear. You just gotta be knowledgeable and open to knowing that, hey, if you go on a road trip, you might get a flat tire. You might have to make an emergency rest stop, for some poor fast food that you ate. I don't know. So it's just some things that you want to keep an eye on when you're trading in the futures markets, that there's always a few things out there. That's why I always keep an open mind. So generally what I'll do is all my fundamental research will be like in the pre-market, in the after hours, and then I use mostly technical analysis during the day here to pick my levels and things like that as far as getting in and out. So you got your fourth straight day of growth in the silver market and the ETF. So you get an uptick on the year-to-date percentage change. Gold up 7.4%, silver up 2.9%. So that's been one of the higher levels that we've seen. I'd have to look back at my notes. I think we were up about 3.4% at one point. But the gold-silver ratio is sitting at about 100 to 1 here. So no real momentum on silver over the gold market at the moment. You know, realistically, if you're gonna look at the ratio, it's easy to look at gold and silver as a ratio because of the fact that that's what we were raised on and things like that. People have been traded since the 70s, beyond those times. That's the ratio that they looked at. But realistically, with silver's 54% industrial demand, you start looking at things like platinum, which have a 60% industrial demand, or even palladium for that respect here. And those ratios might be more important to look at. That way you can get a better gauge as far as the industrial demand aspect. So looking at some other things here. So you got copper futures, they are rising. And it was a big sell-off in the copper market down to about the 450 level. Since then, it's been recovering. You've had 2 straight days of growth here. We're looking at the 3rd straight day, up about 1% on the copper market. You got platinum kind of trading in this 960 to 980 level, gets back above 980, 984, could be breaking out for another retest to $1,000. And then you look at crude oil futures. So crude oil, very interesting one, because you got a lot of people playing both sides on crude oil. And I see this, in a lot of different commodities. I saw when gold went up to about 3,500, a lot of people came in, they were shorting against some of the physical holdings that they have, things like that. They're putting hedges on. Silver, same thing. When the futures get up to 35, I see a lot of people putting those shorts on, and they are looking for another breakdown here. And there's no reason for them not to believe that it's going to break down until it finally breaks out to the upside. So you look at crude oil futures, so it's second successive weekly loss, but there's 3 headlines here, 3 that are driving the price action in the crude oil market. So you got this US-China trade war going on. You got all these tariffs and things like that. You got the global economy and the US economy, it is slowing down. When you go into a recession and you get 2 back-to-back GDP negative growth prints, it'll be technically a recession. It anticipates that it's going to hurt that energy demand. Less people will fly, less people will drive, things like that. So you see less people will buy goods, and there's a lot of energy that goes into producing goods. So then you get this other thing, you get this other bearish headline that comes out. You get more supply from OPEC Plus and their alliance. So there's concerns that the global crude supply will increase, and it's going to increase more than the demand. So that's another bearish headline. The bullish headline that's coming out are the threats that are towards Iran, where prices draw support from Trump's pledge to impose secondary sanctions on any nation or company that buys Iranian oil. So the problem with that particular headline is it enough to drive prices up? And I think short run, that's how you're seeing like all of a sudden this robust dollar move, $1.50 move. Hey, things are heating up between US and Iran, but then you know that Trump's got to make a phone call to like somebody like Saudi Arabia and go, hey, if we shut down Iranian oil, you got to step in there and try and steal some of that market share. And that's where prices are kind of steadily going lower on the futures contract here. But we all know that lower prices, the cure for lower prices is lower prices, and the cure for higher prices is higher prices. So you guys got any questions, give me a call. I won't be on the Schwab Network here today. Gonna meet up with my partner, Bill Baruch. You ever seen him? He's on CNBC all the time. He's always on a halftime show. He heads up our CTA and also our wealth management division here as our chief investment officer, picking some of those selections out on some of the individual stocks and names that we own. If you ever like to know more about that, give us a call, shoot me an email. It's phil@bluelionfutures.com, and then we can get you out some of the information on that, how to become a wealth management client. And then if you ever want a hands-off approach on futures commodities trading, we do have fully managed accounts. Those are on the CTA program, but they do have certain stipulations as far as who qualifies for that type of investment. Otherwise, we've got self-directed, broker-assisted, things like that, different types of accounts. But a lot of information there. You guys have a great weekend. Try and update the chart pack. The support levels on the silver market in these higher volatility type of markets really tend to kind of overshoot. They don't hit specifically. So a lot of pocket support that's been coming in, pocket resistance, things like that, where some of the momentum will dry up once it exceeds or gets below those different levels. But again, you guys got any questions? Have a great weekend. Remember, futures option trading, it does involve risk of loss. May not be suitable to all investors. Good luck, good trading.